Hello friends, my name is Dheeraj Vaidya from wallstreetmojo.com. This is the part 19 of our ratio analysis video series. In this installment, we'll learn all about the operating profit margins. In simple terms, operating profit margins is the profitability ratio that is calculated by dividing the operating profit or the EBIT, that is the earnings before interest and taxes. Basically, we divide EBIT by net sales to calculate operating profit margin. So in this tutorial, we'll calculate and we'll focus on four things. Number one, we'll understand what operating profit margin means. Number two, we'll look at the calculations and the formulas. Number three, we'll apply these calculations on Colgate case study. And number four, we'll look at its interpretations and its uses. But before we jump into the tutorial, a quick reminder. We will be needing all the working files of Colgate case study for this video. So if you haven't downloaded it yet, please do so from the link in the description box below. And also, to keep yourself updated with the investment banking and core finance topics, please do subscribe to our channel, Wall Street Mojo. So let's get started. What is operating profit margins? Operating profit margins is a part of the ratio analysis framework and it comes under the operating profitability category. In our last video, we discussed about the gross profit margins, but in this video, we'll be discussing the operating profit margins. But before we calculate the margins, we need to really understand what is the operating profit as such. Operating profit is defined as the profit that the company generates from its core operations of the business. So first you need to understand what is the core operations of the business. So say for example, if the company is into the business of selling coffees like Starbucks, okay? So they're selling coffees, that's the core operations of the business. So all the income that let's say Starbucks generate from let's say investments in stock markets, that will be unrelated, right? It is not core operations. So that will come as a other income. So we will not be including those incomes which are not related to the core operations of the business. Only the ones which are directly related has to be included. Now, how do you find operating profit? Operating profit is the profit that is generated from, as I said, core operations. So basically, when we look at the income statement, we start with sales, right? And all the direct costs, which we call it as cost of goods sold, is deducted, right? So direct costs, or we call this as COGS, right? So that when we deduct, we call it as gross profit. Okay. So after the gross profit is deducted from this, we have all the indirect costs or the indirect expenses. Indirect expenses are like the admin expense, okay, rent expense, salaries, maybe advertisement expense. All of these are like indirect expenses, but have to be incurred in order to generate sales, right? Because think of rent. The company may have a headquarters where the management does its work. So the rent has to be paid. So it is indirectly related to the sales, right? So when you deduct all of these indirect expenses, we get what is called as the gross profit. So we also deduct, please remember, we also deduct the depreciation and amortization expense as well here, because this is again a kind of an indirect expense. At the end of the day, in order to generate sales, you have to invest in machineries, plant, equipment, etc. So the cost that is apportioned across the years is kind of an indirect expense. So that needs to be included as well. So once we deduct all of these items, what we get is the operating profit. All right. So I hope you understood what operating profit is. Operating profit we generate by deducting direct costs as well as indirect costs, okay, from sales. And the indirect costs include admin expense, rent, salary, advertisement expense, depreciation and amortization, and there could be many others too. So once we have the operating profit, finding operating profit margins shouldn't be difficult. How did we find the gross profit margins? Gross profit margins was gross profit divided by sales, right? So how can we calculate the operating profit margins? It will be operating profit divided by sales. So that's how the formula looks like for the operating profit margins. So here is the snapshot. operating profit divided by net sales. Remember that net sales or revenue, it's one and the same. Here it is multiplied by 100. You can actually in Excel you can directly put that as a percentage sign. All right, so this is how you go about calculating the operating profit margin. Let us now do quick calculations to understand how we can go about calculating operating profit margins. Okay, so just move this a bit. So let's assume that sales is 1000, cost of goods sold is 500. So we will get gross profit as 500, right? So now it comes to the indirect expenses. So indirect expenses are divided into various types. So we will assume that these are the ones which we have in our case. Admin expense, let's say 50. So these are some random numbers which I am putting right now. Advertisement expense, let's say it's 100. Depreciation and amortization is another 100. So how much this comes out to be? So this will be gross profit minus the sum of all of these indirect expenses, right? So this comes out to be 100. All right. So what we see is that the operating profit of the company is how much? Operating profit is 100 and operating profit margins will be 100 divided by your sales. That will be 0.1, that is 10%. How much is the gross profit margins? Gross profit margin is gross profit divided by sales, that is 0.5, that is 50%. So as I said, do remember that there could be a case where you will note that before the operating profit, items like other income or other expenses are included. Okay, so if that is the case, then you should not include that, you need to exclude that. All right, so let's say if in our case other expense was given as 50. Okay, so if other expense was given as 50, we should exclude that. Had you included that, your profit margins, operating profit margins would have reduced further. And again, it is not giving the correct picture, because when we talk about the operating profit margins, we said that the operating profit is from the core operations of the business. And if it includes other income, then that will not be the right thing to do. So we have to remove this. So ensure that it doesn't come into the picture and you get the right setup. Right, so having understood operating profit margins, let's now look at how they look like in the case of Colgate. So this is Colgate's income statement, and let's calculate the operating profit and the operating profit margins of Colgate. All right, so here we have this, when you look at the income statement, we have this earnings before interest and taxes. So this means that the operating profit of the company is already provided by Colgate. Okay, but obviously as an analyst, you have to look at it in more detail. Given the fact that I can easily see that other income and expenses are included here, right? So this is one item which you need to really closely look at and look at the SEC filings as to what this is all about. Since it's mentioned as other income and expenses, I presume that this is not a part of the core operations of the business. So I will deduct it and I will not include that in the calculations, all right, for the operating profit. So as you remember, operating profit is all about profit that is generated from the core operations of the business. So we will have to remove this or other income and expenses from our calculations. So how will our operating profit look like? The operating profit will be, this is the sales, right? So sales minus the cost of goods sold. So that comes out to be 10017, that is gross profit. And when you reduce the selling, general and admin expenses, that's where we get the operating profit. All right. So this is 3998. So had we considered 113 as an expense here, other income, other expenses, then the operating profit would have been 3885. So we just normalized or adjusted the earnings before interest and taxes. Okay. So how much will be the operating profit margin? In this case, this will be 3998 divided by your net sales, that is 16471. So this comes out to be 24.3%. Okay, so let's scroll down and look at our earlier calculations. So when we did our vertical analysis, we looked at this, we didn't remove. So let us now scroll down and look at our vertical analysis, which we did in our earlier videos. So here we have the operating profit margins as 26.0%, 24%, etc. And let's see the calculations. What we did earlier was we took this EBIT, which included the other expenses as well. So ideally this is not right. So we should adjust it. We need to adjust our calculations to make it correct. So for this, I want you to actually come here. That's called the adjusted EBIT. So first we'll adjust the EBIT, which means we'll ignore that other expenses, right? So here the adjusted EBIT will be the gross profit minus your SG&A expense, where we exclude this as an expense, right? So this will become your adjusted EBIT, and we will use this number to calculate our operating profit margins. All right. So when we look at this formula, this was C12 divided by 15195. So I will instead use this adjusted EBIT. Okay. So this will become C27 divided by C6, that is sales. Okay. So the adjusted EBIT, when used, the operating profit margin increases slightly. So that's how we've done our minor adjustments in our calculations. So these now reflect the correct calculations as such. So as an analyst, you are also expected to adjust your operating profit margins if there are some other income and other expenses in between the income statement. All right. So that's how it's done. So I hope you now understand how is operating margins or operating profit margins calculated, what it means, and how it's the interpretations, etc. I hope you found this video to be useful. Please do like and share. And if you have any feedback or want to suggest a topic for any future video, then you may do so by writing about it in the comments section. Also, we come up with very interesting videos on investment banking and core finance topics regularly. So if you haven't subscribed to our channel yet, then please do so by clicking on the subscribe button below so that you can get the notification about our latest videos as soon as we release one. I hope you enjoyed the video. Have a nice day. Thank you.